Hi, and welcome to another episode of Buy Point ASX. I'm Mac in Oz. Today we're looking at Qube, Qube on the ASX. As usual, here is the basic black chart since the listing of the company back at the beginning of 2007. Not a great time to be starting a company, but this company has been essentially assembled from the major logistics, port management, and a variety of other companies over a long period of time. So the actual listing, the exact listing date isn't of great concern. Not surprisingly, the stock struggled a little bit while we were all going through the GFC, but since then you can see that it has taken off with what I am trying to establish as a fundamental in your choice of stocks: continuous and reliable growth. Now, obviously that was the case up until COVID. There was a setback in COVID, obviously, as we all remember. The disruption of supply chains that resulted from COVID extended the impact on all sorts of industries, but obviously for a company like this it was especially significant, and that's why we have a relatively slow recovery period. But over the last 18 months you can see that the company has really taken off. So this is the relevant period, the period since COVID. Now, the company did spring back fairly quickly after COVID. Then we had 2 years of supply chain issues, and then we have this very significant growth from around $3 at the beginning of 2024. And you can see there has been 50% growth in 18 months, with the company recently topping out at just at $4.50. And this is the period of particular interest this year. You can see that this was the last buy point opportunity before the extended 18-month period of growth. And what you see when you're looking at MACD charts is that while a company is growing, the MACD will rarely get below the zero line. Now, what that means, if you're waiting for a buy point being this crossover point below the zero line, is that you have to be patient. The reason that we wait until we have this crossover point actually below the zero line is simply to avoid the experience of investing in a stock only to see the price collapse, or at least go down immediately after you've invested. So this is, for a long-term investor, not a major concern, because the two steps in investing in any stock is first deciding that you want to invest in the company, and second, picking the opportune moment to start building your position in a company. And Buy Point ASX is all about the proposition that the ideal time to start investing in a company and to top up your investment in a company is at the time when the company is most likely to continue growing from the point at which you've invested. And the relevant point with regard to this aspect of technical analysis, as with all technical analysis, is that the golden rule is that you never rely on one indicator only. Context is always important, and that's why you are looking for buy points in a company which is on an upward trend. The reason that we're doing this video today is because, as you will see here, the company is about to hit another buy point, and I'm suggesting that we can be confident that this long-term growth is going to increase in the long term, even if and this is an important consideration, there are further Trump chaos disruptions to the supply chain. I'll talk a little bit more about that in a moment. For the more avid technical analysts out there, here is a close-up of the current candlestick chart. You can see these candlesticks of indecision here. What I primarily rely on is the MACD indicator, the histogram down here, and the potential crossover point of these two lines. The reason for the inclusion of the candlestick chart is so that over time you'll have the opportunity to observe whether or not there are in fact candlestick patterns that align with this approach to choosing a time in which to invest in a stock. Here are the basic financials for the company. You can see that the primary concern for any investor, the revenues that a company is generating are very healthy. The operating margin has settled down to a relatively healthy and constant and consistent 20%. Net profit after normals is a more varied financial indicator, and with a company of this kind, which is continually going through acquisition of existing facilities, existing companies. You don't start port facilities, etc. from scratch. You're going to have abnormals that are going to affect the net profit in any given year. It's a significant company with a market capitalisation of over $7 billion. Price to equity ratio is pretty healthy in today's market. Not ideal. The ideal price to equity ratio is of course below 20, but it's not that bad. Now here is a grab from the company's most recent annual report on the 21st of August, and you can see that the change that we see is very consistent. This is the particular, these are the particular numbers which I suggest are most relevant in assessing the current health of the company and the likely future health of the company. Now, a lot of people might not be particularly familiar with Qube because, as I say, this company has been stitched together over a long period of time through acquisitions, mergers, etc. And you can see that the company covers bulk, import, export and transport, logistics, infrastructure, containers obviously, Patrick, which was obviously once a separate company, which is has contracts for various ports around Australia, Australian Amalgamated Terminals, again another previously distinct company, Qube New Zealand, and a separate ports business group. But here is what is most important in assessing the potential profit and profitability of a company like Qube, which is devoted to international trade in a time when international trade is changing rapidly. What you see here is that Qube has limited its operations to the Australasian area, with a few outlying outposts up here, obviously Singapore being the primary entrepot of Asia. So the significance of this is that these are the locations at which the company operates. The big concern everyone has at the moment is trade in and out of the United States economy. If you are paying attention to that, you will see that all around the world, countries are very busily and determinedly reorganising their international trade affairs to limit the potential impact of any more Trump chaos and the weakening reliability of the United States market. And that includes the other major partners in the North American economy, both Canada and Mexico. So we're an island, we depend on international trade, and on that basis it makes sense for any Australian to be investing in a company at the heart of that. And here's the disclaimer. As usual, thank you very much for watching, and I will see you tomorrow.